Brian, can you confirm that your microphone isn't muted on OBS? Yeah, on OBS.
Test, test, test. Oh, it looks like
Uh,
the mic kicked in.
there you go.
All right, well, that was a butcher job of an intro, eh? Talk about lack of professionalism. Way to go, Brian. But anyway, hey, everybody, welcome back to the RationalInvestor.com's Daily Brief. Green screens flying around in the background. Can't get the microphone working correctly. Oh, well, what the hell. TGIF, I suppose. Thank God it's the weekend. Coming up here. And of course, price action all over the place. I suppose we'll get to that in a moment. Today is Friday, which means that we have a special guest on the call for the after party. And actually, I don't know whether he has a microphone working right now or not, but Zach is our level 3 instructor, options aficionado. Man, he's turning into one hell of an options trader. He will be joining us in the after party show. I don't know, Zach, you got a microphone? You want to just say hello to these people on YouTube?
Aloha. Yep,
Ooh,
I'm here.
fancy schmancy. Yeah, he's from Paradise. He gets to live in Paradise. What a lucky bastard. Anyway, so we will check in with Zach in the after party. Maybe consider joining us. If you are interested in hearing about what Zach is seeing in the marketplace from an options perspective. And also, too, Zach's got a really cool new program that we're trying to pilot right now. Really advanced options stuff. So if you are interested in options, definitely consider joining the after party here today. So. It is Friday, so usually on Fridays I don't really like to be too active. Mondays and Fridays kind of the price action get a little wonky in day trading land. In fact, they usually say, in fact, we have a rule that something like 80% of all weekly trends are established through the Tuesday and Wednesday London kill zones. So it's when you're at sort of the opposite ends of the weekly sort of regular sort of stock market-y kind of trading window, kind of take a little bit easy. Did have an interesting price pattern develop in Bitcoin overnight, and I've been sort of barking about it. To me, it looked like it was a diamond pattern that was forming on Bitcoin. So as a result, we were up at the top end of the diamond last night, and diamond patterns, what a big surprise. We went and visited the bottom end of the diamond overnight. Now, actually, I think we're sort of sit right in the middle. But anyway, we'll get to that in a bit. First things first, I suppose, and interesting too, our weekly commodity trend survey. This really won't change too much through the week. Obviously, it's updated on the weekends. So you can see that crypto really, ironically enough, is actually the only market that I would actually consider like a really good buy in here, both based on value and momentum. Looks like the broader U.S. stock market is trying to find a footing. The issue here is, of course, these banks. They're I don't even know how the best way to describe it. Because sometimes this can turn into like a contagion. And of course, all of these banks are so heavily leveraged and their balance sheets are, it's actually very irresponsible economics. It's the ant and the grasshopper. And what kind of world do you want to live in? Do you want to live in a world with ants that, work their butts off, they save their resources, then when the winter comes, they just kick back and, just enjoy all the fruits of their labors in a nice, warm, safe environment? Or do you want to be the grasshopper who maybe acts a little irresponsibly, is heavily, heavily leveraged, lives in debt, and really it's just always, where's the next Lambo? Where's the next glass of champagne? Where's the next a little haughty that you can get all fixated on. Almost like appealing to those base human desires and vices. And I hate to say it, folks, but over the past, I would actually say 100 years. Um, well, I mean, hell, this probably goes back thousands of years. But we live in this grasshoppery world, and when things fall off the wheels fall off the bus, it can get pretty damn ugly out there. So the question ultimately is, how much contagion is there from one bank to the next bank to the next bank? Are the cartels actually setting some of these other banking institutions up for failure because they kind of want to kill competition in their respective businesses? I would think it's an unequivocal yes answer to that. And unfortunately, I even put a tweet out yesterday. Julian, when he did his baby powder report, I heard one, and he did it on Wednesday this week because he was traveling. But I heard one line from his report that I thought was just absolutely perfect in that, we're in kind of like this, I don't know, you want to call it PvP for all those people who are like gamers and stuff. It's a lot of ankle biting. And so it really shouldn't surprise us that things like the one banking cartel actually is attacking other banks and trying to steal their nut. And trust me, they're going to be doing it to the public right, left, and center. And, I watched price action in the market yesterday. Very, very wild price action. It was interesting because the market started out the day very strong following the Fed. And I just noticed through the whole day, this is a really good example. I mean, they say markets trending higher highs and higher lows, is a bull market, lower highs and lower lows, bear market. What's a market where, they go and take out the low and then instantly go and take out the preceding high? I mean, technically that's a megaphone chart pattern. You could probably build trading plans here to actually force yourself to buy on that event and to sell on that event. And you'd probably do very well in this type of environment. But I think it's really important that market participants understand the backdrop of the type of trading environment, what we like to call a market state. This is evil market state. This is not trending market state. This is not encourage the economy to grow market state. This is evil, ankle biting, cartels out to try and screw over competition. And then to add insult to injury, you've got people that are in charge in our society that are just about dead. And they're not going to be around 5 years from now, 10 years from now. I would be shocked if they're even here a few years from now. And they're proposing just absolutely outlandish stuff. And actually, I put a tweet out yesterday. This was shared in the TRI Lounge. This Kennedy guy, I think he's going to actually rise to fame. I wouldn't be surprised if we talk more about this gentleman. Very eloquent speech yesterday about some of the staggering failings that we're seeing out of our leaders. And I've made the argument, I even said this in this tweet, I've made the argument all along that a bank like SVB, it was set up to fail. And if you don't believe me, listen to this gentleman. I think it's worth taking a moment and just listening. A very reasoned, very logical, and if anything, very dangerous for the banking cartel, because I think that people are seeing through the bullshit. That literally you have certain players in this cartel that are literally trying to put other banks out of business, and they're kind of setting them up for failure, which is sad. And I would even argue that the Fed, to a certain degree, is culpable in this debacle. They are at fault. But of course, you're never going to have them accept any of the blame. It's always going to be other people's problems. Anyway, The irony of all of this is we just go about doing our business. And I mean, it's almost funny that this particular name, because I really don't like saying the name. It's you know, I don't know. I guess I'm conservative. I'm old school. Jesus, somebody even made fun of me because I was over 40 years old and I was like I was a grandpa, and I wasn't invited to the under 40s club. Oh, I felt very ostracized this morning in a meeting. Anyway, but I mean, we're just running our business of trading, running our business of making money from trading. I don't really care. I mean, like I said, terrible name, but what the hell? Doubles are doubles are doubles. I'll take the money. I don't mind. So, you know, like we're gonna just go about doing our business of what we do, and I think actually we do very, very well. I'm quite pleased to see. You know, there's some people in the TRI community, they're banging out doubles like literally daily. It's disgusting the amount of money these people are making. But it's good to see Old Man Beamish is participating in the doubles trade as well. And it's just, we're just running our business of trading. Nothing's really changed here. But I will say that if you don't know what you're doing in this marketplace, and you're coming in and you're just trading off the cuff, or, you know, trading from the hip or whatever, this is a dangerous, dangerous environment. Be very careful with your money, people. Very careful. In fact, actually, I even tweeted this out. And one guy that I always chit-chat with here on social media, I've known this guy 10, 15 years trading on social media. And the irony of it all is that actually this is a relatively good time. Because when the public is freaked out and they're all upset, then usually actually that's near the bottom of the market. When the public is actually euphoric, I mean, you guys all remember last year, or I think it's actually now a couple years ago, but that dog money peak, whenever you see that Remy guy put out videos about, you know, the Bitcoin billionaires, the kids getting rich in Bitcoin and all that kind of stuff, that's actually when you need to be most worried about getting your ass handed to you. But if you don't know what you're doing in this marketplace, the 1%, they're going to take your money just like that. And yesterday was a great example where they were just washing stops all over the place, just stealing people's money. And as Julian said in his report, you know, this is very, very PvP kind of mode. We're all out to get each other. The irony of it all is my response to him was, well, I actually know that this market's going higher. Why? Well, who can tell me what does this 91.4%? What is that in reference to? And if you look at this price chart, this is the anti-Jim Cramer ETF. Of course, when the market was selling off there and the banking freaking out and all that, this thing was moving up because Cramer, of course, is predominantly long. And interestingly enough, this asset itself, if you're relatively good at this game, it's telling you what to expect in the future here. So I thought that was kind of amusing. That, yes, and I agree with Zoinky that basically we're probably are going to move higher here. And at the bottom, it's uglier than stink, and the 1% steals people's money right, left, and center. But there are funny little anecdotes in the market that actually are telegraphing that this market wants to move higher. I have to say, I'm just over the top impressed with TRI's signaling system, especially our screeners. You know, we had excuse me, we had time tested, and the interesting thing is it's very difficult to find this information anywhere online. So it took me years to get this whole platform built and operating correctly. But things like weekly key reversal signals, like I said, very, very difficult to find this online anywhere. And we just got a whole bunch of them that are all spitting up, buy, 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 buy. So I don't think it should surprise anybody that, if we punch up QQQ on here, you see that, this thing, what a surprise, it actually did start moving higher here through the week. Actually did confirm the outside upside reversal and has also confirmed this double bottom and then another double bottom. So now we can actually start drawing. Actually, we could probably even do this now while we're here. Nice little treat for YouTubers. Here's a nice little upside objective target for you. And in actual fact, we had a great meeting with the people at Coinigy here today. And we're going to be getting those shows up and going again. And I actually did a couple of these Fibonacci tutorials updates to the old ones that we had using their new site platform. So be sure to check that out. The retracement tutorial and the extension tutorial were put online yesterday, and of course everybody's like, "Where's the chaos theory? Where's the chaos theory?" So that'll be coming along shortly. I don't know whether they'll do it today, but probably in the next few days. So anyway, point of the matter here is Foggenbaum now starting to project that we'll probably head up to this 358 area. And that makes sense too. You can see there's a big old gap, 91.4% in this area up here. And really, the irony of all of this is the cliche goes, buy when it snows, right? So there's your snowing period, November, December, and sell when it goes. So we should actually expect this market to rally up into something like May, June here. That's usually how this stuff goes. So it really shouldn't surprise us that we got a big fat buy signal there. And this market's going to sort of begrudgingly work its way higher here. And if anything, the fact that so many people in the public are so worried and so negative right now, in a weird sort of way, is actually good for the bulls. Because you can't really have a market move higher if everybody's long. And actually, this is a great journal piece. Somebody was asking the other day, blog pieces, fundamental pieces, we can do for social media. If you think about the market as nothing more than just a sum of all the participants, if everybody, let's say there's 100 participants and everybody has gone and bought, and maybe there's like one person that's like, you know what, I'm still a bear, there's no way I'm going to buy. But 99 of those 100 people have already bought because they think that the market's going to go up. And they are all long. Number one, the sentiment, because they are long and they want to make money, the sentiment is going to be, I'm bullish. And this is why when Bitcoin's like 50, 60,000, you go on social media and you see everybody and their brother is bullish, that's a warning sign. And that's actually exactly if you do happen to follow my Twitter feed. And FYI, there is some impersonator that's going around impersonating Brian. I don't really want to pay Alan's ransom extortion fee to deal with the hackers. So I just, I actually have a bunch of people on the site that are like, oh, there's another one that's popped up, Brian. Go get him. So... but anyway, I'll just make a blank message, and anybody who's watching this, if you ever get a DM from me or something that sort of looks like me, just tell them to go screw off. I will never DM anybody unless they've DM'd me first or we specifically said we were going to go talk on social media. I will never, ever reach out to people who follow me on Twitter and start shilling. And somebody potentially fell into, somebody has gone and impersonated me and then reached out to people and say, hey, buy my little this, buy my that. I mean, there was one guy where they did, and he's like, well, have you been following me long? And the guy's like, dude, I took all 3 of your damn courses. So it was blatantly obvious that this guy didn't know who the hell he was talking to. So just FYI, if you are getting DMs from people that sort of maybe look like me, just tell them to go screw them off. I'm never, ever going to use social media to DM you. I just won't. I've never have, and I never will. You can even see on my profile, I don't follow very many people. I don't even really use social media the way you're supposed to use it. what I do, and it's interesting. I'm following 786 people, but I actually looked at the data. It turns out half of these accounts are dead. So I'm really only following about 300 people or so. But anyway, so just FYI, there are jokers out there who are trying to impersonate me, and then of course trying to shill their garbage to them. In fact, actually, I think I'm gonna go find this giant trapdoor spider and stick them on him. Anyway, they found a new species of spider down in Australia. That'll give you nightmares. I think it's the size of a dinner plate. Anyway, all right. So back to our story. Lots of effery. Interesting. I don't think that the banking issues have been entirely dealt with, and I think that the Europeans right now are sort of going. And the interesting thing is that we've known that Deutsche Bank has been struggling for a very long time. And they've just been sort of like on a lifeline. Just they're trying to keep these European banks going. Debit Swiss, they just exploded. So the interesting thing with that is that some U.S. regulators are now starting to say that, well, the combination of UBS and Debit Swiss is going to actually create a monopoly, and that's not fair for competition. So the Americans are actually talking about saying, no, you can't do that. So I don't know how all this is going to play out, but we'll see. Only time will tell. And remember, I mean, the whole damn thing's a cartel, right? And the banksters, they're the worst cartel because they'll actually come off as like, well, we're part of the government, can't touch us, and all that crap. Anyway. On top of that, we actually did have, actually our Wednesday show co-host, the crypto show that we do, and actually we'll be winding that show up relatively soon. As I said, we're going to get the old Bitcoin and altcoin trading talk shows up and running with the Coinigy people here over the next month or two. Maybe we'll have Paul on as like a guest, maybe once a month or maybe once every couple months. We're gonna sort of rotate different guests on the show. But anyway, in his weekly newsletter that he sends out to his people, he always is posting about major econs coming up, and of course, it's a good policy that you probably shouldn't be taking trades through that. So we did have one this morning that was fairly significant. Durable goods orders, you can see, huge miss. I mean, just a staggering miss. So I think to a certain degree that sort of took a lot of the enthusiasm out of the market. And really, I like to just follow the data set. The irony of it all is that we can actually do pretty good analysis, technical analysis off of the fundamental data sets, which just drives the fundamentalist crazy. You should all look at this and probably think like Megaphone. You can sort of see the volatility in the market is really expanding, getting a little bit wonky. I suppose you might argue, of course, here's the sickness, the reaction to the sickness, and probably the irresponsible reaction out of both the Federal Reserve. Frankly speaking, I think the Fed is culpable in a lot of the inflation that you are seeing right now. They're going to talk it away saying, well, we were in the middle of a sickness. And kind of like my substitute drama teacher, well, what would you have us do? But this is all part of Klaus, right? And this is all part of that great reset bullshit, sort of conspiracy, tinfoil hat kind of stuff. But and there's nothing we can do about it now. I mean, thank heavens, people like Druckenmiller came out and said, you know what, you're screwing us. Would you please stop this idiocy? And I think Mr. Powell sort of got the message very loud and clear and said, all right, yeah, okay, we've gone a little too far, and maybe we got to pull things in. And of course, now they're all like, hey, we're just going to keep tightening until you all are broke. Crazy banksters. Anyway, the point I think you could make out of this is we rallied, following the sickness and the stupidity, backed off, and then you can see the market. This is how strong the market is that even just over the past few months, If the Fed had said, you know what, we're going to back off on the interest rate increases, we don't think inflation's a problem, you can see this thing was getting ready to rock and roll here, big old W. And in the face of the Fed saying, nope, we're still going to be vigilant, we're still going to raise rates, bang, this thing has gone and put in a massive M here now. So obviously this is, you can't really trade off of this, but I think this is a really good analogy of just listening to the market's message. What is the market trying to tell us? What is the economy trying to tell us? And, M's are M's are M's. That's a pretty nasty failure there. Obviously, a month or so ago is looking much bleaker. Does this banking crisis actually lead to, I think what the Fed would like to see here is lending standards, because of these banking runs and the banking crises and all this, lending standards themselves are going to tighten up and people are just not going to want to lend any money. That's what happened in 2008. It wasn't really like people couldn't continue making the payments that they had agreed to. It's that, when we went through the GFC, all of a sudden the banks themselves said, you know what, you're not credit worthy anymore. And if you do want to refinance, well, you're going to have to pay this much higher rate because, you know what, we're just not in a friendly mood anymore. Look at all the crisis out there. Right? We got to tighten things in. So I think that's what the Fed would like to see happen. But I don't think that's going to happen. Interestingly enough, if you picked apart what Mr. Powell said there on Wednesday, he said that the data coming out was actually still very inflationary. And the only reason why they were pausing and slowing down is because he felt like because of the banking crisis, the lending standards were going to tighten up, and that in itself should act as a Fed, short-term interest rate increase, kind of constraining measure. Only time will tell, but that might be a really dangerous assumption. Anyway, we'll see what happens. Trading-wise, I was actually in meetings this morning, so didn't really have any time to do any day trade setups per se this morning. I am running a boot camp here. We'll either do it this spring somewhere in Southern Europe, thinking maybe like northern Spain along the Atlantic coast there. I know one of our site members has a place in particular that he's thinking about. And this is the kind of procedure that I would recommend. So, heading into that event, I want to build this out. Just say this is what I'm going to be lecturing off of. So, you do have days where you have meetings. So I was tied up in meetings today, so I couldn't really do any day trades. What was really cool, though, is swing trading plans. Had a really interesting setup come in overnight on the corn. Interesting how Stamp is acting this way. The good part about it, if anything, this is a really good reason why you trade setups. I think I kind of made a bit of a mistake here. I took a short shot. We had railroad tracks heading into the Fed event. Was that really such a smart idea? And if anything, it's good that, you journal, log, diarize, right? I get the impression this probably was a bit of an amateur trade on my part. Had to book a loss. If anything, good that I had religion. This could turn into problems if you don't. Then we had the Fed announcement, which created this interesting looking diamond pattern. I've been tweeting this out, where technically failures in reload short zones should set up shorts, and of course bottoms in reload long zones should set up longs as we work our way through this diamond pattern. And we had just actually a really pretty setup come in last night. And if I understand correctly, I think a lot of this overnight action, this is one main reason why I like to trade setups, and I like to clearly define profit objectives, and I like to clearly define, actually have open orders working to sell at certain levels. So if I understand correctly, there was a little bit of FUD out of Binance overnight. They basically suspended withdrawals, and If I understand correctly, the website itself was hard to get on. And then, and I think that was what precipitated the big dump in the corn. It was interesting because I just worked my orders at my levels, and you can see. I actually we did like a bot short setup. So actually, I don't know whether you can include this as a follow up. But what I should probably do is have like literally when we do these Google Shorts, have like, here's another demonstration of the bot. Here's another demonstration of the bot. Here's another demonstration of the bot kind of thing. So this is an interesting one because it basically price rallied into a short trade location based on range trading. And then the failure in this actual short trade location was a bearish bot setup. As you can see, one high, two highs, three highs. We had a fourth high here, but I was already in by that point. But I had enough reason to get short off of this. I really like shorting M tops. Also a really pretty inside bar failure, and there was a cute little double top failure here. So I just trade setup. So there was a bot setup. I took this. I would call this maybe like a swing trade. It's obviously outside of futures trading hours. I mean, maybe you could call it a day trade, but it was overnight. And as you can see on that FUD, they dumped into our levels. And I even remember, and you can see what time is this, 4:30 in the morning. I even heard this go off and I was like, okay, well, either I just got stopped out or I made money. And I got up and found out, hey, look at that. We made money. Way to go. So just yet another example. It's a trader's life. Interesting what happened over here. I think like Binance I think Binance is back on. I'm not positive. Could be mistaken on that. I haven't logged in or gone onto the site yet. But if I understand correctly, I think Binance came back. But I get the impression that like if you actually look at all the other exchanges, like if we go, I don't know, BTC, USDT, right over there on Binance, we get a completely different chart. Hey, where did that big candle go? Or that big wick. So something kind of weird happened on Stamp. I'm not quite sure what, but I almost get the impression that it was sort of like probably there was a rumor going around Binance that, hey, they were going to shut things down. And then, of course, the FUD starts taking over. So everybody who has any sort of, like tethers or whatever on the site, they're all freaking out, and they probably were trying to market buy the Bitcoin to get it off the exchange as fast as possible. And then when they came out, there was a whole sort of cascade of all these crazy prices in Bitcoin. I've had a bunch of people today go, what the hell do you make out of that wick? That's kind of screwy. Really, I suppose if Binance really did go under, and Binance was having some problems, you probably are going to find a massive flight into Bitcoin and out of things like stable coins and all the Schult coins and stuff.
Hey, Brian.
Yeah. Where are we? Are we 30 minutes already? Oh, yeah, I guess so. So anyway, I guess the final thought for you here today, as I said, I'm not day trading. I was all tied up in meetings. Had a half decent little short idea working there. I don't know if this is more crypto screwery here, but if anything, I was happy that I did take profits at the bot level. Obviously with this chart pattern looking like it is right now, I still think that we're in this diamond pattern. Maybe we just don't use Stamp to analyze the coin here. I mean, you could probably go over to like Coinbase. Yeah, see, it's not there. And if you look at the futures, you don't see it on the futures at all. So I'm considering that Stamp candle a bit of an anomaly. And I would still say, to all intents and purposes, this diamond pattern is still playing itself out. So to that end, I don't really think that this whole consolidation window ends for, as you can see, what's that, 152 bars at 30 minutes. So that's 70 hours, and that's what, 3-4 days. So you can already see we're about halfway through that. My hunch is they're probably just going to keep banging it around here until we get to that Sunday broiler chickens show. So summary for the week: my Bitcoin trading, probably a little bit of an amateur trade heading into the Fed. For some reason, I assumed that there wasn't going to be any more fuckery to the upside, and they were putting a top in. Interesting how the algo gave us a sell signal here. So the algo is still sitting on the sidelines through all of this. And I don't really see this resolving until probably through the weekend. We probably sit in this range, just banging back and forth between green boxes and red boxes. And that's sort of my outlook here. And, just final thought, when I peruse through the altcoins, you can see there's a bit of red on the screen. I mean, we got pretty fortunate banging out this win, so I feel pretty good about that. But as you can see, I'm not seeing a lot of green here today. And if anything, there's a whole bunch of names that are on my shopping list. So, maybe pop in the site and participate in the lounge, because I wouldn't be surprised if this selling gets going. Then I might actually do some buying here through the weekend if we start coming down into some interesting levels. So, okay, there's your summary video for the day. I hope you enjoyed that. Hope you got some value. We'll see everybody in the public. We'll see you guys on the Broiler Chickens show on Sunday. And I would highly suggest you pop in and listen to what Zach has to say with regard to options. He's a fantastic trader, and I think he really knows his skill set now, and it'll be a real pleasure to check in with him. You ready to do this thing, Zach? Uh-oh, put him on the spot. Oh, he's probably out.
Yeah, had to find the unmute button. Yeah, I'm ready.
All right, there he is. All right, have yourselves a great day. PMA for the win. All the best. The only life prices. Bye-bye for now.